Hello and welcome to Car Dealer Live. I'm James Baggett, founder of Car Dealer Magazine, and today on the show I'm chatting to automotive industry analyst Mike Allen from Zeus Capital. Good afternoon, Mike.
Afternoon, James.
Thank you very much for joining us. Now, a quick introduction for Mike. He works for Zeus Capital. It's an investment banking operation with offices in London, Manchester, Birmingham and Edinburgh. Mike's an experienced analyst. He's worked for the likes of UBS Global Asset Management and Numis Securities before becoming a founding director in the Panmure Gordon Liverpool office. He's had 20 years looking at the automotive sector and writing about the listed dealer groups, and he's a board advisor at Carwell. Now, so if anybody's got an eye on the future for the motor trade, it's Mike. So with a build-up like that, Mike, I've got some big questions for you. Firstly, this has been an incredibly turbulent time for the motor trade. Are all the dealer groups going to survive, in your opinion?
Depends on whether you say are all publicly listed dealer groups going to survive versus industry. I think, before we went into this COVID crisis, we were anticipating 20% dealer capacity to come out of the market over the next 5 years or so. I suspect that trend will be accelerated more now, given the impending economic situation we'll find ourselves in. But I think with all of the public dealers, I'm sure they all have a future, and indeed will probably benefit from accelerating capacity coming out of the industry at the other end.
So you were expecting 20% of dealers to close across the UK within the next 5 years. I mean, what are you thinking now that's going to be?
Yeah, perhaps that kind of 5-year horizon might be in the next 2 or 3 years, given increasing cash burn, etc. And I think, some of that capacity was due to come out anyway, given the higher barriers to entry, investment costs, etc., demands from the OEMs, compliance industry. But I suspect with, a lot of dealerships, or all dealerships now kind of burning cash, that there'll be a financial aspect to that as well.
So is that going to present some opportunities to those bigger dealer groups that have got decent balance sheets? Well, obviously they've been severely hit over the last few weeks, but is there going to be some opportunities for some acquisition for it?
I believe so, but I don't think it will just be right at this moment. I think, as we've said, a lot of businesses are burning cash. They don't know how much debt they're going to come out with this as well. So, I think on a kind of 6 to 12 month view, then definitely. In the next month or two, probably not, just given the levels of uncertainty.
We're probably 7 to 8 weeks into this now. The dealer groups were very quick to close. Obviously, they were mandated to by the government. Some then reopened very small parts of their businesses. Now we've got entering a new period, which we'll come on to in a moment. But just with hindsight, do you think that the dealer groups that you write about acted in the right way to tackle that lockdown?
I think so. With hindsight as well, is difficult really. You look at some of these businesses, Virtue, for example, it took them 13 years to build up from nothing where they got to, and they all had to close within 24 hours notice. And the scale of those businesses and the thousands of employees, etc., to get that as a logistical challenge for all of them must have been huge, and not a challenge that anyone's faced before as well. So, I think all the dealer groups, clearly observed the government rules and reacted very well, really. Given the size of the operations, I thought they did that very well.
Are you surprised then that some of them have been a little bit slow to reopen? There has been this opportunity for a number of weeks now to sell online, deliver to people's homes. Now, I know that's very difficult when you're a big dealer group on scale, but there was an opportunity there to do some business, wasn't
there? I think all of the CEOs I talk to, doing short-term business hasn't been their kind of primary objective. I think, they've been thinking about the health and safety and well-being of their own staff as a starting point, and I think that's the right thing to do, as opposed to trying to be fastest off the starting line. And particularly when the country is still in lockdown, the situation we're in, etc. I think kind of morally they've all observed and they've prioritised health, safety, and well-being before selling cars. So, and I think that's the right thing.
They're in a very difficult position now, though, aren't they? Because there is this news this morning that click and collect is probably going to be allowed from the rules and guidelines we've seen. It looks like it's allowed in England. They've got huge numbers of staff on furlough. They're not sure what demand's going to look like. It's going to be very difficult in this period for those guys to reopen, surely.
I think it's impossible. I mean, as I said before, nobody's been in this situation where the whole business had to lock down to zero, and then obviously there is the furloughing aspect. There is assessing demand as well, which is going to be difficult to do. And then the real tough thing is kind of reallocating labour resource and trying to read what the demand is. So I think that's pretty much an impossible task, really. And there is going to be kind of trial and error, and that it's going to be a challenge that nobody's faced before.
I see Robert Forrester this morning from Virtue was tweeting about the fact that click and collect is allowed, and that's really going to help businesses because they can start opening up and delivering cars, especially from March. One of the dealer group bosses I spoke to this morning said exactly the same thing. We can get a trickle of cash coming back into the business now. I mean, just how important do you think that news was this morning for the motor trade?
Yeah, I think it's important. I mean, clearly it will help to kind of determine what the levels of pent-up demand is as well. So I think it's important. It's useful. There's obviously a lot of essential workers as well at the moment. We think there's around 7 million in the country that may well need a new car. A PCP might have kind of lease might be running out, and we know there's in modern days now, customers have to make a decision on the cars. It's not you buy it for cash and you hold it for 10 years. It's quite often with leasing PCP agreements, the consumer has to make a decision on what they want to do with the next car. And I think there is a lot of kind of reticence at the moment from using kind of public transport. So there's undoubtedly going to be kind of pent up demand, and it's good that they're in a position to kind of service some of that at the moment.
What about this story about Pendragon and Luggers then? This merger one that came out a couple of weekends ago. I mean, it took everybody by surprise. Yeah. What were your thoughts on that?
I mean, it's interesting. I thought the timing wasn't quite right. I mean, I've said before, everybody's burning cash at the moment. Nobody knows how much debt they're going to come out with, etc. I think if you did the exercise on a kind of spreadsheet and you started to say, well, it could be a 10 billion kind of revenue group, 200 million of kind of operating profit, there'd be a lot of cost synergies potentially that could come out of that. So you might think, well, in difficult times, the cost synergies may well, act as a kind of defensive barrier to your earnings, and that would certainly be appealing. But I just think given where we are at the moment, we are very unsure of supply levels, never mind demand levels coming out of this, and debt positions, etc. I just felt it, perhaps a little bit premature. And obviously, both companies have got their own unique challenges as well, on top of, at the time the dealerships all being closed. So, I would anticipate some consolidation coming out of this, but perhaps as we can see an end towards it and what company finances look like.
I mean, I think I saw that merger described as two drunks bumping into each other in a bar, which I thought was a fantastic analogy, but it's probably a little bit unfair. There was some news from the Pendragon one of the Pendragon investors that came out of that report, that they were interested in further merger talks. So, I mean, do you think Pendragon are seeing this as a solution to their problems? Because clearly they've got quite a few at the moment.
Well, we don't know what the kind of board thinks about that, and it's clearly, what one shareholder that might have their own agenda and might, see a particular way out of it. As I say, it is an interesting kind of angle to it, and there probably is a time and a place for it. But I would have thought that management teams at the moment have to concentrate on their own businesses, minimize cash burn, and kind of ensure that their own systems, infrastructure, people are all fit for this new market that we'll be coming into.
What are your thoughts on Pendragon overall? I mean, they've had a very turbulent few years. They've spent huge amounts of money, made massive losses. I mean, that's not sustainable, surely. What do you think is going to happen to Pendragon?
I think Pendragon clearly has had a difficult kind of past. I think large-scale acquisitions has not been a recipe to deliver shareholder value, and it hasn't. It's destroyed value as time will have told. I do see that there's pockets of value in the business for sure. They've got a good leasing business. There's a good IT software platform, Pinewood, etc. They do represent some good brands with some good, with some good facilities. The question, I guess, is what is the right size? What size should Pendragon be? So it's about, I think, getting the business right size for the new environment. But I do see kind of pockets of value in that business, and there's definitely some jewels in the crown.
So do you think they're going to have a bit of a breakup and sell some stuff off?
Not necessarily. I mean, I think it does depend on the kind of how severe this kind of financial crisis is, what the facilities are, how much room they've got, how much cash they burn, do they, and obviously, when selling parts of businesses, you always want to be in a position of strength as well, and your finances will dictate that. But yeah, I can see it emerging as a kind of smaller business. We've already seen them come out of the US, and it's probably kind of streamlining management attention on things that work for them and where they can deliver value.
And am I right in thinking that a few years back they sold a huge amount of property for hundreds of millions, which has all been burnt up now?
Not quite. So they sold back the property, and then they leased it back. So they kept the properties, and in exchange for cash payments, they were paying lease arrangements, and those lease arrangements were upward only lease arrangements in the main. So that increased the operational gearing in the business, because the lease costs that they paid in exchange for the cash in 2005-06, and that was used to reduce debt after buying Reg Vardy, etc. That their fixed cost base actually increased on the back of that, and the fixed cost base was kind of growing as well in line with those lease payments. So it probably put them at a disadvantage from a operational gearing perspective relative to the peers who didn't participate in that.
So, Mike, we parachute you into the boardroom at Pendragon. I'm sure you'd love that. What's the first thing that you do?
I think it's about kind of right sizing the business. Where are the pockets of excellence? Kind of back that. What do you need? What don't you need? And I think you kind of figure out what do you want to become? How big do you want to be? I think being the largest or second largest in the industry by revenue wouldn't be that important to me. What would be important to me is how profitable is the business. What can I make kind of per outlet? How can I grow the kind of profits? Have I got the right balance sheet structure now in place as well, in order to participate in any disruption, any consolidation? And I'd right size the business. I'd forget about being a top three operator, a kind of by revenue. That just wouldn't interest me. I'd be really interested in enhancing the profit per outlet.
Did you see the news that former Chief Executive Trevor Finn is going to be heading back to the market with what he says is going to be a used car offering? He said he's been spending the last 12 months travelling the world, when obviously before COVID-19 kicked off, and he's learned a lot of lessons, he says, and he thinks there's an opportunity to launch something in the UK. What are your thoughts on that?
Yeah, I mean, I've known Trevor for a long time, about 20 years. I obviously wish him well. Be interesting to see what kind of model he comes out with. He's obviously passionate about kind of used cars as well. And, we're seeing a lot of different business models at the moment in the used car industry, from your Kazoos to your motor points. The dealers are obviously very much involved in that sector as well. It is a very large sector, and I do think we'll see pockets of demand coming back there quite quickly, actually, after this. So it'll be interesting to see the kind of the slant that he's got and where he positions anything that he decides to start up.
Certainly will be an interesting one, that. What about lookers? I know you've written quite a lot about these guys over the years. When it comes to this FCA investigation, these irregular charges, I mean, what are your thoughts on their position?
I mean, the first thing I'd say about lookers is obviously Mark Rayban running the company at the moment is keen to the fraud investigation for, that they've expanded that at the board's kind of request. So clearly he wants to ensure that once they get a clean bill of health from that, major lessons have been learned, and, that they've looked at the entire group, which I think from everyone's perspective is the right thing, really, in that it's not that what they haven't done is just, quietly wanting the investigation to go away. He's encouraged further probing, and that has to be good for the long-term health of the business to ensure lessons are learned.
So, I mean, what do you think's actually gone on behind the scenes there at Lookers? I mean, these charges seem quite unusual, don't they? I mean, actually, there was a warning, I think, from UHY Hacker Young that actually there's a lot of other dealer groups who could be in similar positions.
I don't know. I mean, I'm not privy to any information on that. Clearly, they run a lot of dealerships. There's a lot of controls that need to be put in place, etc. No detail has come out yet. So, I think all we can assume is that there will be no stone left unturned, and whatever does come out of the investigation, then major lessons will be learned. But I don't think we'll ever get the kind of the fine detail of what went on in a particular dealership. It's probably likely to be kind of themes and how they plan to kind of learn from those lessons.
Which dealer group, in your opinion, is best positioned to ride this storm?
I think I think dealer groups that were well run before COVID-19, that had strong balance sheets, that had strong processes, that had strong leaders at the top, that had built a kind of strong culture, etc., will do well. And particularly, with systems, good systems allows good compliance practice, etc. So probably, the likes of the Virtues, Marshall Motors, Cambrias have all been well-run businesses before. And don't get me wrong, they've got the challenges as the whole industry has at the moment. But having unique problems on top of that, which are company specific, must be very difficult at the moment.
Virtue seems to be doing pretty well at the moment. I saw Robert said he brought back 1,000 staff from furlough not too long ago. I love the fact that he's very active on Twitter and he always gives you his opinion, which is great. What's your thoughts on Virtue?
Yeah, I mean, they had an update last week. Clearly, Robert's engaged with all stakeholders very well, be that kind of, colleagues, the city, banks, etc. They all know that he's a strong operator. There's a good business there with a strong culture, and I think everybody's also realistic about the challenges ahead. But there's a kind of confidence there that Virtue will kind of get through it in a kind of in an honest way, and share people the data of how they plan to get through this. It's going to be a very kind of fluid situation, but Robert's attention to detail, the data, etc., I think is a good way of getting through that.
What about Marshall's? Dash seems to be doing a brilliant job over there. His staff seem very, very happy, and he keeps announcing stellar results. I mean, obviously, this is going to clearly hit them. I mean, is it time that they bought someone big and grew even further?
Yeah, I mean, Dash has built a kind of a fantastic platform at Marshalls. If you look at what it was before he joined and what it is now, he's consolidated it, and I'm sure he could run a kind of a bigger ship. They've got a very strong balance sheet as well. Strong culture, as you say. And the integration he's done with acquisitions such as Ridgeway would give you confidence as a shareholder, that he could definitely do that. I mean, clearly it will depend on the attitude of the board and the kind of family as to how big they want to go. And as we've said before, being the biggest doesn't make you the best in this industry. It's probably an inverse of that, really. So I think if you've got your own kind of systems, controls, you know what businesses would suit, what price you'd pay. I think it's best to take a long-term approach and let the stars align.
What about the others? I mean, people like Inchcape. I mean, how are they getting on?
Yeah, I mean, Inchcape's huge business, obviously. We'll hear from them next week. Very much distribution focused, really, as opposed to retail. They do have some very good retail businesses, but the focus really of the strategy is about kind of servicing OEMs from a distribution point of view. I think there'll always be an element of retail in the Inchcape business because some of those operations are strategically important with the OEMs, but it will really be about kind of distribution for that business. UK, they've obviously found life tough over the last year or so, and likely to be finding it tough now.
What about Cambria?
Yeah, Cambria, great business. Obviously know Mark and James for a long time. The returns on capital that business generates been really, fantastic, really. And they started with about 10 million of kind of startup capital, and what they've done with that capital to kind of build a property base around 90 million. I mean, before COVID, I thought that they'd be delivering around 12, 13 million of pre-tax. They built a phenomenal business for the capital that they've started with, and clearly, they're strong with their brands like Aston Martin, etc. And they've been moving a bit more into the higher luxury segment with some success. So clearly, they'll be burning cash like anyone else, but I think they'll be working hard to kind of minimize that cash burn, and they've got a lot of kind of liquidity from a balance sheet perspective. So I'd expect Cambria to survive and thrive in this environment.
And then at the other end of the scale, you've got people like Motorpoint. I mean, by scale, I mean the price point of the cars that they sell. The used car market could be quite buoyant after this if the pent up demand is what we think it's going to be. What are your thoughts about Motorpoint?
Yeah, I think it's good business. They've when they came to market, they've delivered. They've got a kind of consistent strategy, different model to the kind of dealers in terms of they don't partake in the kind of same investment as the dealers have had to do, but equally the dealers have probably got a bit more protection with after sales and OEM support, etc. So the margins are kind of not too dissimilar at the bottom line. It's just how they get there from a gross profit point a bit different, and they obviously Motorpoint benefits from a kind of a lower cost base. But I think, you know, I think you're right what you're saying in terms of the used car market. I think there will be pent up demand. You know, people may want to trade down the cars, or they might need an additional car if they don't want to use public transport. The difficulty would always be, and you know, the supply. You know, is the right level of supply of the right vehicles. There's always the kind of battle dealers, used car supermarkets kind of face, and I don't see that changing. What happens to used car prices will be interesting. I mean, I've seen, you know, clearly there hasn't been a lot of activity. I know some of the auctions have started again today, so we'll be looking at that quite closely. I know there hasn't been a lot of Part X activity, so you know, the school of thought that that might hold up prices, but then equally, you know, people might want to liquidate used car stock to enhance balance sheet liquidity. But you know, I was looking at data about from 2009, which I remember, and we did get an initial crash, but then supply shortages emerged pretty quickly, and actually used car prices started going up throughout most of 2009. So it's interesting just looking back at the kind of data from the credit crunch.
Yeah, it's, the picture that we're getting has been mixed. I was chatting to the head of product at Auto Trader last night. We read a story this morning that said April values rose by 0.1% on their site. They think it's going to be the same for May, and actually it's all in the dealer's hands to make sure that they don't slash prices and bring these used car prices tumbling down.
Yeah, and I've heard some of the things where dealers, you know, don't want to be, you know, don't want to go straight to the auctions and dump stock, etc. Because that kind of never ends well. But equally, there will be companies that, you know, will be looking at the kind of used car stocking loans, etc. Perhaps might want to de-gear a little bit. But as ever, it's complicated in this industry. It is kind of measuring demand, looking over your shoulder on supply levels, and making sure you're in the right kind of stock. And you know, if you weren't in the right stock coming into this, then obviously, you know, you're going to want to eradicate that quickly and kind of replenish your stock that suits the new market.
Our dealer group's good value at the moment, Mike.
I think on a long-term view, definitely. I mean, most of them are at significant discounts to the net asset value. As I said, I think it's hard on a kind of 6-month view, just because this kind of cash burn and what does the market look like. There's going to be a lot of uncertainty for kind of months to come. But I do believe that there is significant value over the long term, because, you know, I think it's clear that what the OEMs want, they need, you know, for any manufacturing operation, you need a kind of good retail network, and those that provide a good retail service will be pretty important for the manufacturers, and I think we'll get the support to come through this. And it's probably in the next 2 years, when hopefully this thing is gone, then you'll look back and say, I can't believe the share prices were at such a big discount to the property values, etc. The challenge we've got at the moment is just measuring earnings is pretty impossible at the moment. So it's hard to kind of put a kind of earnings valuation on these businesses until we can start to get back to seeing what the kind of new levels of profitability is and how much debt these companies are going to be carrying.
And I suppose the other problem on the horizon, and dare we speak its name, is Brexit. I mean, it's, you know, that's not actually that far away and can have huge impacts to the motor trade. I mean, what are your thoughts on that?
Yeah, no, I mean, God, I haven't talked about Brexit for a few months, but you're right in what you're saying. It's definitely a kind of consideration, and you know, for the last 2 years, with Brexit, clearly had a big impact on currency, and you know, we definitely noticed when sterling kind of fell. If you compare some of the PCP deals in 2019 from say 2015, the drop in sterling made those deals kind of quite unaffordable, I thought. And looking at some specific examples, you were seeing a kind of 40% increase in kind of in monthly payment costs, or you had to put a significant of deposit in to maintain those monthly costs. So what this industry doesn't need at the moment is sterling to collapse, and those costs have become even more unaffordable. But yeah, I think people have talked about it to deafen the industry, but if we did see a kind of a drop in sterling and developments there, then I don't think it'd be good news. But equally, I think what we have to remember is the UK will always be a kind of very important market in the UK, second biggest market, and I don't see that changing, to be honest. So I think there will always be, the UK will always be strategically important, no matter how hard the kind of push away from the EU is.
What about car manufacturers, Mike? I mean, what's your take on these? I mean, are we going to see any disappear completely?
It's difficult, isn't it? I mean, you look at their monthly, their weekly cash burn rates can be a couple of billion a week at the moment. So they've obviously got their own problems, their own issues. I think they do realise the importance of having a retail network, but then some of their problems are far greater, in terms of what will happen with EU emission fines. Clearly that's a big problem for them. They've invested heavily in electric vehicles. Can they? They'll need government help to kind of get the right demand for the investment that they've already undertaken. And the huge operations as well. And COVID presents, significant problems, and COVID is a global problem. These are global businesses, so that they've got a lot of problems. Having said all that, we know politically car manufacturing is key to many countries around the world, UK being one of them. Are we likely to get a kind of scrappage scheme as we saw last time? We've not seen it confirmed, but I think we'll get something of some description, because they know politically it provides a lot of jobs and is important to a lot of countries.
Yeah, I mean, that's certainly what I'm hearing from the people I've been chatting to over the last few weeks. The talk of the scrappage scheme is getting louder and louder all the time. I mean, I suppose the other option is a VAT cut, but they've got to get their money back somehow, haven't they? The government's spending out a lot at the moment.
Yeah, no, they are. I mean, clearly the government taking a long-term view. The health, well-being, and livelihoods of people is clearly key as well. And keeping industries like the automotive industry, it provides a lot of knock-on jobs as well for tier 2, tier 3 suppliers. So the impact of automotive is far greater than just the manufacturers, and I think the government realise that. So I'm sure there'll be kind of some support, and this will continue to be a key industry.
So, big question for you, Mike. How long before we bounce back?
Bounce back economically?
Yeah, but and across for the motor trade. I mean, are they ever going to get back to the level that they were in February?
It's interesting looking at the various scenarios. Looking at the kind of SMMT forecasts, and some of the worst cases I've seen are kind of 1.5. Best case might be 1.7. If it's 1.5, we're back to where the market was in the early 70s. Kind of 1.8 might be towards the early 90s. The structure of car buying has changed a lot since those times. So, we've seen PCP penetration increase. If those remain kind of affordable products, then, customers are used to changing their cars every 2 or 3 years. And, whilst we might see, a little bit of people not renewing, that there might be a substitution effect elsewhere. I mean, I think the next 3 months is going to be incredibly difficult for the whole UK economy, and clearly, Q2 GDP figures are going to look horrible, unprecedented. But I think coming into this, the economy looked to be in fairly good shape actually. We did get kind of people saying the March order books was looking good, etc. We had kind of full employment. Interest rates were kind of low. They've obviously got lower now. We saw some kind of confidence in house price growth, etc. as well. Consumer confidence was okay. If we can contain this to a kind of first wave, and there's no setbacks in terms of going back into full lockdown, etc. If we do keep that R rate kind of down, and I do think we'll get a kind of a sharp kind of bounce back. And there's definitely signs of pent up demand, whether it's people needing a new car, additional people looking at used cars because they don't want to look at public transport, and after sales. I mean, after sales would be the first thing to come out. I mean, a lot of people's cars have been on the driveway for 7 or 8 weeks, and the cars aren't designed for that. And clearly there's service plans in place, but I'd expect to see good pent-up demand in after sales pretty quickly, and towards the lower end of the used car market.
I suppose it all depends, Mike, what happens after this. I mean, I'm just looking at the GDP figures here for the first quarter that came out this morning, down 2% overall in the first quarter.
Yeah.
That's clearly going to be down much further in this quarter. But this has been enforced on us, hasn't it? I mean, this is not something that's come off the back of poor performance. It's come off the back of a global pandemic. So it surely all depends on what that knock-on effect is to job losses in the wider industry. I mean, the airline industry, hospitality industry. I mean, what are your thoughts? I mean, is that going to be enough to draw us right back into a really dark period?
Well, I think the government's done a great job, haven't they? They've extended the kind of furloughing scheme, which I think was hugely generous. I wasn't expecting that yesterday. I thought the original scheme was pretty generous. So I think, we've got a government hell bent on kind of preserving jobs, etc. So hopefully that, the Labour stays in place. That will allow companies to kind of scale up, facilitate any kind of pent-up demand. The demand side of the equation is very difficult at the moment because, and it is changing on a week by week basis in terms of, have we got the number of cases under control? How confident do people feel going out at the moment? When people can't see their kind of families, it does put kind of things into perspective as to what people want. But going back to the motor industry, I do think people are, will not want to be using kind of public transports. They're going to want to keep themselves and their families safe, and confidence will come back where people will want to travel to see people when those restrictions are lifted. So I think we're still living on a kind of week by week basis at the moment as to kind of what changes. But clearly, if we can avoid a huge kind of second spike and, restrictions get lifted, then I think confidence will grow and we'll see areas of pent-up demand.
And lastly, Mike, what's the most important thing this crisis has taught you personally?
I think for me personally is you can be a lot more productive, working at home. I traveled a lot to London, a lot around the country, etc. And when you look at the kind of commute times that I was kind of putting in versus what I can achieve here without that distraction, without spending time on that, then I think face-to-face meetings are still going to be very important, etc. But I think I'll end up just questioning it more. And, I've seen levels of increased productivity, you know, for myself, across my team, across my kind of firm. And I think we probably didn't trust technologies like this to kind of have good meetings, but they work, and you know, it's quite functional. So it's taught me a lot about time management.
Yeah, same here. It's certainly transformed the way that I've been doing business, and having chats like this has certainly been an eye opener. As has this chat, Mike. Thank you very much. I really appreciate your time today, and thank you for giving up your ideas of what's going to happen in the future. So I appreciate it. Thank you.
No problem. You guys do a lot of great work for the industry.
Thank you, Mike. Well, I really appreciate that. So tomorrow on Cardio Live, we've got Sherwood's Motor Group's MD, Simon McConaughey. Friday, it's G-Force's Paul Stokes. He's a former rocker man and understands online like no one else. He's going to give us some guidance through online sales and the tips he's picked up over the years, so it should be a good one. If you want to get involved in Cardio Lives like this one, you can email me, james@blackpoolmedia.co.uk, or find me on Twitter @CarDealerEd. I'm on LinkedIn too, and you can send me a message there if you want to. We've set up a breaking news WhatsApp group for Car Dealer Magazine. If you want to take part in that, just send me a message and I'll send you a link to join. And there's a full schedule for Car Dealer Lives that are coming up over the next few weeks on our website. Have a look, it's cardealermagazine.co.uk. Thanks once again to Mike for joining me today, and I'll see you all tomorrow. Thanks, goodbye.